So let's carry on now with how to accelerate H2 infrastructure. And it's time to hear from Pierre-Etienne Franc, not as a former Air Liquide or Hydrogen Council, but head of a new investment called FiveT Hydrogen. So Pierre-Etienne, the announcement has been made only a few weeks ago. Can you please tell us how you decided to create such a invest fund first?
So bouncing back on what we discussed just before, I could not finish my statement because Thierry jumped in, but I think it's exactly the topic of trying to find the leadership and to make sure that indeed the need to move to scale is properly captured and that we have a couple of players playing the catalyst. So the idea is to say that those projects, even if at scale they're getting better, they're not always solving all the technical issues or the profitability issues that industrial players want. So there needs to be a risk sharing mechanism, and there needs to be partners coming from the financial world to help bridge the gap to profitability and to work with project financing schemes. So the idea is to put together a fund, infrastructure driven, which is going to invest only on projects, mostly greenfield projects, so enabling those projects to move at scale. So investing only in projects where the minimum amount of the project is in between 100 to 200 million, which is even, it is big or not so big because the scale projects that we look at in the future should be gigawatt size or hundreds of stations or even more. But the idea is that if you bring together industry players and LPs in a fund, basically providing a wish to co-invest with financial LPs who want to move into the new, I would say, investment topic of the decade, which is hydrogen related. And if you look at those equipments, projects, plants, which might be seen as a venture topic today, if you look at them 10 years down the road, with the belief that we all have that hydrogen is going to become unavoidable, then those assets become an infra play. And the fund is there to enable that, to take those projects which are risky and to bring them to the situation where they have become infrastructure assets because they are loaded, the technology has been de-risked, the reliability has improved, and they are delivering steady cash flows. So this is the purpose of the fund. It's going to be raising, we expect 1 to 1.5 billion euro. We have already got a couple of intents from a couple of US investors, but we expect, of course, to get some also from European and Asian ones. We're going to invest in the places where indeed you've got the mix of a political and industry leadership with the right regulations, with the right support schemes, and the willingness of key players to invest massively, because let's be serious. If we don't invest massively now, the thing's not going to happen, and then the energy transition will not be solved, and we will be delayed in every single element of the equation. We will have also, the bet is that we do a pure play fund. We're not doing a generalist one, mixing everything with hydrogen as a part of it, which then would always give an alternative to invest in something else than hydrogen, because hydrogen is more difficult. So it's focused on hydrogen, it's pure play, upstream, downstream, working as a minority player most of the time in all the countries which have the right regulation, as I said, and over 10, 12 years. So with that, if you basically bring on the table 1 to 1.5 billion euro and you are minority investors with some capex support or funding support from the policymakers, plus some project finance in some of the topic, not all, but some of them could be project finance, then you're in fact triggering the ability to move on 10 billion worth of projects, which is significant in the current context, and which is going to enable to move at scale. The last element, and I will stop there, the beauty of a fund is that you have no other choice than to invest in a way, because when you get the money, you need to make it work. So it doesn't mean we're going to invest in stupid things, but at least we are going to invest rapidly in hydrogen-related topics at scale, which is exactly what we need to make things succeed. So now I'm just waiting for the LPs to come, chasing them, of course. And I'm very excited to learn about all the projects that are on the table. And I guess we heard about some of them, and more to come, I guess, in the next discussions.
Pierre-Etienne, you already have partners, including Plug Power, and your target is to have 1 billion euros, maybe in a few months.
Yes. So today we have gathered around 400 million euros worth of intents. Of course, it needs to be converted into a final fund opening. We will really open the fund into marketing phase in the summer, and we expect indeed to get around 1 billion with almost mostly industrial, but we will then try to increase the size with financial LPs as well. We are relatively confident, even though you never know. The topic will be to find the right projects and the right scale projects at the right time, because the issue is to go step by step into very large scale projects.
Okay, so gentlemen in the panel, any reaction to this initiative, an invest fund focusing on infrastructure? Mr. Leperc, maybe?
I think it's a great initiative. You know, congratulations, Pierre-Etienne. I think there is today a missing link. And we have tons of infrastructure funds today who are very happy to invest in highways, in ports, in hospitals, in all these very useful things. We have, as I said, lots of smallish projects and project financing, and something which is at scale is lacking. So I think you're making the right move. There is an immense need. I can tell you that it's not billions of euros which are to be needed. It's at least hundreds of billions. Obviously, banks on the lending side will have to contribute. And what is at stake here is what is the financial ecosystem which is going to drive that revolution. And today, industry technology is very important, but finance is probably just as important. And bringing together those institutional investors who today want to put money in long-term cash flows. You know what? If you're putting your investments in energy today, you have two horrible solutions. One is to put your money into fossil fuels, which is a sure way to lose everything. And people know that, and you've seen the stock prices of those oil and gas companies which have been cratering. The other one is to invest in solar or wind power, which is seeing its value, the value of those electrons collapse. Last year saw a record negative pricing in Europe. Why? Because of solar and wind. You have skyrocketing capacity in Spain today in solar power, which is having a very negative impact on solar, on power pricing. So if you want to lose your money today, put that in solar and wind power as well. So the question is, where do I want to put my money if I want to invest in energy? You want to put it in a molecule, because a molecule is what does everything. A molecule can be stored for months. A molecule can be transmitted for 5,000 kilometers with a pipe or more with a ship. That's an amazing thing that you can do with a molecule. And then obviously you want that molecule to be competitive, and it's zero carbon. Now, if you have a zero carbon, that's zero carbon oil, basically we're talking about, or oil, gas, and coal. That is very attractive to investors. So I'm sure Pierre-Etienne is going to be very successful, because he's really putting the right product at the right time.
Thank you. Let's see if we have some questions from the audience. So I turn the floor again to Bruno Jamet from Vehicle of the Future Cluster. Bruno?
Yes, just a short question. A few minutes ago was mentioned a target price around the 2.50 euros per kilogram, or dollars, but it's the same. This seems very low. And so the question is, what are the conditions for success in such a low price for hydrogen? If electrolysis, is there electricity price, a capex, a total volume produced? And also the question is also, do you see other means of producing H2 as an environmentally friendly way and a cost-effective way?
Oh, I think it's maybe a question addressed to Thierry, even if he's going to detail idea initiative later on.
So, well, okay. let's do some math. The clients, the truck company wants a product at 2.5 euros per kilogram in the tank. How do you get there? You need hydrogen supplied at the wholesale level at 1.5. You need to move the product through pipes, and it will cost you about 0.3, the piping, the transmission, and the storage. So that means that the maximum production price, the absolute maximum price, should be 1.2 euros per kilogram at the generation side. Now, can you do 1.2 euros with blue hydrogen? The answer is no. It doesn't work. So blue hydrogen is not that you don't like the color, but blue hydrogen is out. So that's 30 euros per megawatt hour to make the transmission. 30 euros per megawatt hour. How do you get there? If you're doing green hydrogen, that's electrolysis. You need, considering the efficiencies of the electrolyzers and the cost of the electrolyzers, it means the total power cost cannot be higher than 15 euros per megawatt hour. Which means the first thing, that you cannot connect that electrolyzer to the power grid because the cost of the power grid itself is close to that level. So it needs to be a joint location between power generation, in this case renewable, and electrolyzers feeding into the gas grid. That's where you get, because the cost of the gas grid is 10 times lower than the power grid. Moving electrons is super expensive. Storing electrons costs 1,000 times more than storing a molecule. You're so much better off with the molecule itself. Where do you get these 15 euros? Well, not from wind. You get it from solar. And where do you get it from solar? Where in Europe, there are two countries, it's Spain and Portugal, so and Southern Europe. So if you start from the market, this is, we call that design to cost. If you start from the market, it gets you to something where there's no other option. And anybody who thinks otherwise should do the math. This is grade school math. Anybody that doesn't do grade school and puts shareholder money into this thing is doing not a good service to their shareholders. Then again, let's start from the market and look at how you re-engineer a system that meets the demands of the market. There again, because if you're at a higher price than that, you won't have any volumes. It's like selling oil at $200 a barrel. Who's going to buy you solar oil, great oil at $200 a barrel? It's a commodity. It comes with a price. It's binary. You're either at the right price or you're not. And in this case, we have to start from the market.
Okay, thank you.